Welcome to our deep dive into Autobacs 7. We're going to try to get a clear understanding of their current business and future plans, and especially when it comes to their growth strategies and how they're thinking about creating shareholder value.
Okay.
And to do that, we're going to be looking at their 2024 annual report,
All right.
which is pretty interesting because it kind of covers 50 years of history and a roadmap for what's next.
Yeah, it's quite a story. To imagine going back to 1947 when Japan was just starting to motorize and this little auto parts store pops up. Talk about being in the right place at the right time.
Yeah, perfect timing for sure. I mean, they essentially grew alongside Japan's car craze, right?
Exactly. They became a household name. But here's what I think is interesting. Just 5 months after opening that first store, the founder, Toshio Sumino, kicks off their franchise model.
Oh, wow.
He didn't wait around. He really believed in empowering others from the get-go.
So that early faith in franchising, is that a big part of why they're so successful today?
Absolutely. I think it's woven into their DNA. Now, fast forward to today, and their business has evolved into four main segments. You've got the core domestic Autobacs business, their overseas operations, the car dealership B2B and online alliance business, and then a category simply labeled other business.
Okay, a lot to unpack there, but it sounds like they're not just your grandpa's auto parts store anymore.
Not at all. Each segment reflects how they're adapting to a changing industry.
Right.
Take their bread and butter, the domestic Autobacs business. Here's the challenge. The Japanese market for car stuff is actually shrinking.
Really? Why is that?
Well, there are a few reasons. Online competition is fierce. Car ownership in Japan is declining. And new car tech means people need different goods and services than they used to. It's a tough spot, but Autobacs isn't sitting still.
So what are they doing about it?
They're getting strategic. First, they're pushing their own private label products like the AQ line. Higher quality, competitive pricing. It's a way to differentiate themselves from the generic stuff you find online.
Makes sense. Control what you can control, right?
Exactly. And second, they're blending the online and offline worlds. Think. Order a part online, pick it up in-store schedule and installation, all seamless. It's about convenience, meeting the customer where they are.
Okay, so that's how they're tackling the domestic market.
Yeah.
What about their overseas business? I'm guessing it's not as easy as just copying and pasting what works in Japan?
You guessed right. It's tough to replicate that brand loyalty and understanding of local car culture in a new market. They've hit some snags trying to directly translate their retail model overseas.
I can imagine. So are they giving up on international expansion?
Not at all. But they are switching gears. They're focusing on wholesale, especially in Southeast Asia where the car market is booming.
So go where the growth is.
Exactly. And they're being smart about it. Instead of building a ton of stores, they're leveraging existing relationships with local partners and focusing on their private label products, things like oil and batteries. It's a lower risk, potentially higher reward strategy.
Interesting. So they recognize what wasn't working and adapted. Now this next segment, car dealership B2B and online alliance business. This feels like a whole different ballgame. What's going on here?
This is where you see them really branching out. Autobacs Cars, their used car franchise, is actually doing incredibly well.
Yeah.
Top ranked in customer satisfaction according to their report. Then you've got B2B partnerships like their deal with Nissan and online alliances that expand their reach.
So they're not putting all their eggs in one basket. It's about diversification, creating multiple avenues for growth.
You got it. And then there's that intriguing other business segment. This is where they're pushing beyond just cars and into the garage lifestyle concept.
Garage lifestyle. Okay, I need you to explain this one.
Think of it as an extension of your living space. Autobacs has launched the Gordon Miller brand, which includes everything from stylish tools and furniture to apparel. They're even selling a customized lightweight truck under the Gordon Miller Works utility label.
Wow, so it's not just selling products, it's selling a whole aesthetic, a way of life.
You nailed it. They're tapping into a specific kind of consumer, someone who sees their garage as more than just a place to park their car. It's a bold move trying to create a whole new market segment.
It certainly is. Now, before we get into the nitty-gritty of their financials, I'm curious, how are these different segments actually performing? What's working, what's not?
Well, that's where things get interesting. The 2024 report paints a bit of a mixed picture. Their overall sales and profits actually dipped in fiscal year 2023. However, before you hit the panic button, there are some important details to consider. Part of that dip is due to a one-time accounting adjustment they made to their franchise chain package.
Okay.
Think of it like this. They restructured the deal they offer franchisees, lowering wholesale prices, but at the same time, they increased royalty rates. It's a short-term hit to their numbers, but it's designed to, create a stronger, more aligned partnership with their franchise network over the long run.
Yeah, I mean, it makes sense they want to solidify those relationships, especially with the domestic market being so challenging. I'm curious about the specifics. What were their actual sales figures, and how do those compare to previous years?
Sure. In fiscal year 2023, their net sales came in at 229,856 million yen,
Okay.
which is a 2.7% decline compared to the previous year.
Got it.
Operating income also took a hit, down 12.2% to 6,355 million yen.
Okay.
But remember that accounting adjustment we talked about that played a significant role in those figures.
Okay, so not necessarily a reason to panic, but definitely something to keep an eye on.
Yeah.
And as you mentioned earlier, the domestic Autobacs business is still their biggest revenue generator, right?
Absolutely. It makes up about 69% of their total sales.
Wow.
Which is why adapting to that shrinking domestic market is so crucial for their overall health.
Right. Makes sense. So we've got a sense of their revenue and their profitability.
Yeah.
What about their balance sheet? What does that tell us about their financial stability?
Well, the good news is their balance sheet is rock solid. As of March 31st, 2024, their total assets stood at 194,948 million yen, with a healthy equity position of 128,845 million yen.
Okay.
Plus, their interest-bearing debt is relatively low, at 9,319 million yen. They're managing their finances prudently, which is always a good sign.
So it sounds like they're not over-leveraged and have a strong financial foundation to build upon. That's reassuring, especially as they're investing in these new growth initiatives. But how about their cash flow? Can they actually afford to fund these ventures?
Let's take a look. Their cash flow from operations remains strong, reaching 14,431 million yen in fiscal year 2023.
Okay.
This tells us their core business is still churning out cash even with the sales and profit dip. They're not bleeding cash, which is key.
That's good to hear. And they're putting that cash to work right. They mentioned some significant capital expenditures in the report.
You're right. Their capital expenditures for fiscal year 2023 amounted to 9,149 million yen. That likely went towards things like opening new stores, upgrading technology, and developing those new brands we discussed earlier.
Right.
It's an investment in their future.
All those things cost money, but hopefully will pay dividends down the road. Speaking of dividends, let's talk about shareholder value. The report made a big deal about their commitment to returning profits to investors. What's the story there?
Well, they highlight both their dividend policy and their share buyback programs.
Yep.
In terms of dividends, they paid out 70 yen per share in fiscal year 2024.
Got it.
That translates to a payout ratio of 85.9%.
85.9%. That sounds pretty high.
It is, but their dividend payout ratio has actually fluctuated in recent years.
Okay.
Some years it's been lower, some years it's been higher. It likely depends on, their profitability, their investment needs, and their overall strategy for balancing those short-term returns with long-term growth.
It's like trying to find that sweet spot between rewarding shareholders today and investing for an even brighter tomorrow.
Yeah.
But buybacks, that's a more direct way to boost shareholder value, right?
Absolutely. When a company buys back its own shares, it reduces the number of shares outstanding, which can increase earnings per share and potentially push the stock price higher. It's a clear signal they believe the company is undervalued.
So both dividends and buybacks are on the table. It sounds like they're taking shareholder value pretty seriously.
They are, but ultimately the best way to create shareholder value is to run a successful business. And that's what their 2024 medium-term business plan, Accelerating Towards Excellence, is all about.
I love that name. And I'm guessing this plan touches on all those challenges and opportunities we've been discussing.
You bet. It focuses on three main pillars.
Okay.
First, creating new touch points with customers, which we already saw with their online-offline integration strategy, and the garage lifestyle push.
So it's about reaching customers in new and engaging ways, staying ahead of the curve as consumer behavior evolves.
Exactly. Second, developing innovative products and solutions. This includes their private label products, their partnerships, and their exploration of new business domains. They're not content to just sell the same old stuff.
It's about pushing boundaries, finding new ways to add value. And the third pillar.
The third pillar is establishing new business domains.
Okay.
This encompasses their overseas expansion, their diversification efforts, and their willingness to venture into uncharted territory. They're thinking big and long-term.
So it's a comprehensive roadmap for growth. But let's be honest, there are always risks, right? What are some of the potential roadblocks they might encounter as they try to execute this plan?
It does feel ambitious. They're juggling a lot.
So what are the potential pitfalls they need to watch out for?
Well, for starters, succeeding in that shrinking Japanese market is no easy feat. They can't just rely on nostalgia. They need to keep innovating, keep understanding what the Japanese driver of tomorrow wants. If they fall behind on trends, even the best private label products won't save them.
So it's about staying nimble, anticipating those shifts in consumer behavior. What else?
Their overseas expansion is another big one. That pivot to wholesale in Southeast Asia is smart, but it's not a guaranteed win. Each country has its own quirks, cultural preferences, business practices, even what kind of oil people prefer.
Right, what works in Thailand might not work in Malaysia and so on.
Precisely. And managing all those local partnerships, ensuring quality control, maintaining their brand reputation, that takes serious work. They can't afford to be seen as just some foreign company dumping products.
So striking that balance between their Japanese expertise and local adaptation is going to be crucial. What else should we be watching for?
This garage lifestyle push is a fascinating wild card. It's a totally different game than selling car parts.
Yeah.
They're essentially building a lifestyle brand from scratch.
And that's tough, right? How do you even measure success in a market that barely exists?
That's the question. Are people really going to buy into this vision of the tricked-out garage as an extension of their home? Will it translate into sustainable profits? It's a bet on the future, and only time will tell if it pays off.
Okay, so a lot of potential, but a lot of uncertainty too. Now we can't forget about the 2024 problem. You mentioned earlier that looming labor shortage in Japan's logistics industry. That could impact a lot more than just Autobacs, right?
Absolutely. Japan's facing a demographic crunch, and that's going to ripple through their entire economy. For a company that relies on moving goods around, it's a real threat. Delayed deliveries, higher costs, unhappy customers, none of that is good for business.
So what can they do? Just cross their fingers and hope for the best?
Hopefully not. They need to be proactive. Maybe it's investing in automation to reduce their reliance on human labor. Maybe it's partnering with logistics companies to secure better rates and service. Whatever the solution, they need to be thinking about this now, not when the trucks stop rolling.
It's about being prepared, right?
Yeah.
Not just for the challenges you can see coming, but also for the ones you can't.
Couldn't have said it better myself.
Oh,
And on top of all that, there's the global economy, recessions, trade wars, you name it. Those things are beyond any company's control.
it's that reminder that no matter how good your strategy is, there's always a degree of luck involved.
There is. But a well-run business is better equipped to weather those storms. And from what we've seen in this deep dive, Autobacs 7 is not messing around. They're taking these challenges seriously.
So final verdict time, 50 years in, is Autobacs 7 set for 50 more?
Well, they have a lot going for them. A strong brand, a history of innovation, a solid financial position. Plus, they're clearly thinking about the future, not just resting on past successes. But those challenges we discussed, those are real and they're not going away.
So it's a mixed bag? Cautious optimism.
I think that sums it up well. It'll be fascinating to see how they navigate these next few years.
Well, thanks for taking us on this deep dive into Autobacs 7. It's a company with a rich history and a future full of both promise and uncertainty.
It's a reminder that the business world is always evolving. The companies that thrive are the ones that can adapt, innovate, and anticipate what's coming next.
And for you, our listener, we hope this deep dive has given you a deeper understanding of Autobacs 7 and the challenges and opportunities facing the automotive industry as a whole.
Remember, the journey of learning never ends. There's always more to discover.
Thanks for joining us on the deep dive.